Okay, what's going on? Good evening, good evening. Tonight is Tuesday, July the 8th, 2025, and what we're going to do is go over the DRC, right? The DRC for the day. I'm going to go over a couple more things that I normally do. I'm going to look at DXY. I'm going to look at obviously NQ because you guys know I trade NQ the most. Obviously some futures, indices, and we're going to look at some stocks. We're going to look at Tesla, Nvidia, and we're going to look at QQQ and SPY, and we're also going to possibly look at gold. But I'm going to put um, most of my focus is going to be on NQ. Now, like I said, guys, that DRC video will be coming out, but just to kind of give you guys a framework of what you're thinking about is one, there's four things we're answering every day, right? One is what is something we improved upon that day? And then number two is just what is something I learned that day? Number three is what changes do I need to make from this day? And then I just have number four as an overall, grade of the day, of how you executed, how you managed risk, how you did different things, right? Because you want to see how you actually, you want to be able to gauge yourself how you actually execute, how you manage risk. Okay, so let's go straight to the chart. So I'll kind of go over what the pre-snap read was for me and just reading overnight price and what we were seeing. Let me go ahead and do this here. Okay, make sure I can see this. I want to be able to, like, for sure be able to lock in. So when I came into it today, I had the overnight price. I said basically overnight price rallied on futures, slow grinding higher. DXY seemed bullish into the 98 level. NQ was presenting some things just for New York. So let's look at dollar to start, right? So how I like to look at dollar is the weekly, daily, and 4 hour for direction. And so I'm really what I really focus on personally is obviously smart money concepts, the Wyckoff concepts, but more importantly too, just how trading works, supply demand. All right, so a lot of people try to get away from the fact that supply demand is a thing. Um, you know, it's a legit thing, right? And it can really help you with your orders. Now, just to kind of show you guys really quick before we get started, how I personally, do that form, which I'll show you guys how the form will look. This is how mine usually looks. So just to kind of give an example here. Um, so, okay, sorry here. So this is just kind of how mine looks. So, oops, flip the camera. Okay. So like I keep up with the day very, very to the T, right? Now my handwriting is terrible, right? But that's what I like to do. Now, like I said, for you guys, what I do on this side, right, is what I improved upon that day. What did I learn? Changes I need to make, and just some key moments. Okay. Okay. So let's go back to charts. I just kind of wanted to show you guys that like I really love this stuff when it comes to tape reading and being able to do this and be able to see this stuff. Now it has been a rough few days, like I've been telling you guys, but as long as you're staying inside your parameters and not going insane once you leave the office, then you should be okay. I just want to make sure that everything's down here. Okay, cool. So, like we were saying, I've been looking at dollar from this perspective and just understanding that we're in that month of July. So let's mark that monthly open here really quick. I believe it is. It's going to be down here where the daily opens are as well. So let's just say that monthly open is right around in here, right? For this week. So we've got that July open, and you just got to think, since the 2025 open, we have sold off, right? Last month's open right here was June, we've sold off. So for me, I'd like to see, some shorts start to cover positions like order flow wise. But that doesn't mean they have to, right? Because on the monthly, we still have a lot of room that we could go down. So I just kind of want to make sure I can showing that and you can see it. But yeah, down to like here, somewhere in the 94, somewhere on the way up where these late traders would be. All right, we could see that. But as of right now, when you look at a weekly, you're seeing signs of strength. You're seeing daily higher, 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 low, another push higher. But you could at any moment, especially 97.80 on a 4 hour, see price push back into demand levels like 97 or below market um, from last week at this market open and this market here. So just below this accumulation area here. Okay. And then when I came into that, I was seeing strength there. So I wanted to see possibly, since we're at all-time highs, that we may see some weakness on higher time frames out of these, right? The futures. And so we weren't really seeing that. Dow was kind of doing its own thing. I was looking at US 30 with a good buddy of mine, but really focused on ES and obviously NQ. And so what I wanted to see today was when we started to open, were we going to come below this monthly open, this key level, and could we even reach the daily open inside demand? Same thing with ES in that same play. And so when the setup actually started to set up, which was this morning for me at 7 a.m., before these falls, right, back into demand, I basically started to look for that type of setup. Now, when I see this type of setup, one thing I always notice too is that, the people who play these trades late or play breakout trades or they're retail, rich retail, or it could be someone that's profitable though still, but they just seeing their orders and where they want to take profit really helps, especially when you understand the concepts of supply demand. And so what I wanted to see coming into this today was it looked like this for NQ at one point. Would have looked like this right before the New York Open. I wanted to see right an extension down on all three, right? And YM, obviously, you guys know in US 30 kind of has a spot of its own, but this is just what I was looking at as a comparative strength analysis. Was I wanted, especially with ES and NQ though, right? Because I wanted to see prices come back down into this demand on the way up. So you have the fib retracement from the low, swing high, right at the high of the day. And once they broke that 50, I wanted to see how they were going to play there with ES. And at the same time, like I said, with NQ, they did the exact same thing and they did the exact moves that we were looking for. All right. So when you go and we dive into NQ, uh, a smaller time frame, 15 and 5 here, and a little bit smaller, maybe even the 1 minute here and there. You'll see why I was choosing these areas, right? To go long and to do certain things on my short positions and understanding when to take profit. Now, real quick, something that might help traders, right, at the with their ES trades and their NQ trades could be SPY and QQQ and understanding supply demand and where price could possibly go, right? When you look at the higher time frames of this, we're at all-time highs, right? On SPY, we're at all-time highs on NQ. So think about when we've been talking about buying these assets, right? Has been since my birthday is oh, I don't want to say my birthday on here, but my birthday is around that 420 time. So we were looking for mitigation buys to rally up to exit the prices here and here, right? I was calling these areas out. I was calling 444 out for a long time. We ended up getting those delivered, and you had the massive gap up, which was just crazy, to extend price up higher to take all-time highs, right? So these move in unison with what we trade every day. And so by seeing these, be in a certain area of accumulation distribution and just order flow in general, right? People, buying low and selling high, these really do help. So for example, right, if you want to see what I'm talking about, is like this is essentially what I'm talking about is a great area to be buying these type of plays, right, in accumulation. Now, when price starts to accumulate up like it has, right, there's going to come a point where ask yourself the question, are you willing to buy this high, right, above old highs, right? Are you willing to buy here? Are you willing to see a noob or a novice trader do that, and then you're able to exit some of your short because you actually need someone there to fill the other side of the order, right? So that's why we really pay attention to price action and structure and understanding order flow because it makes it easier for you to be able to get in and out of positions as well. And so that's what we're seeing here. And looking at like a 1 hour, like I said, and a 1 hour here, I'm just not seeing until we get past this demand candle, like until we actually break on SPY like this and break structure and go lower, maybe like print something like this to go and break this one as well. Then same thing with QQQ. Unless we break here and start to come into this area, and then go and do something like that, like I'm still seeing them holding this area to fill the gap this week. I mean, there's nothing that's really changing that now. When I wake up and I see things at 7 in the morning, they could be breaking down and they could be on their way, right, for these lows, right? For this is for QQQ. Okay, so they could be on their way for that. They could be on their way for the imbalance, right, in the 548s, right? If we're going to break down and start to fill gaps and stuff like this on SPY. So you just have to kind of be understanding of what prints and where the body candles close, right? Because the body candles really don't lie to you, and you're going to have a better understanding of what you're looking for in that situation. So that's QQQ and SPY. And then really quick, we'll jump into NVIDIA and Tesla. So Tesla on the daily, to me, we were looking at Tesla in these areas, 250s, 239s, 240s, right in here, where it was accumulating, right? As you can see, accumulation. Price was accumulating, price went up and took that high. Same situation, guys. Understand, ask yourself this question. If you bought an accumulation, all right, if you bought anywhere in this area and price went in your favor, drew on liquidity, do you want to be the person buying here, or do you want to be the person who's selling your order back to a buyer here? Like, I think it makes a lot of sense like that. Okay. So that's Tesla, right? And so same thing here, right? Supply and demand, you got to understand, right? This could now stocks could very well, they could gap, they can do all kinds of great stuff. But when you give it like a gist of an area, I mean, we're looking at something like this. And then if we start to see prices, do similar things to this, right? To attack low resistance highs right here. All right, so these highs right here, then cool. Because what would we do? We would look for those buys inside of here. So, right, we'd see this, bam. We'd look for the buy, all right? We're good. Price comes up and makes that high. We don't want to buy right here. We want to be selling or giving back our position to who? The person who's deciding to buy at 370 when they could have bought with us at 320, right? I mean, like it's crazy. All right, so the reason why I'm saying that this could be really nice is because this is how NVIDIA played out. We had a demand candle, price rallied off the area, right? So let's look at it from a higher time frame perspective at the same time. All right, because you want to see the daily, we're at all-time highs. So we're looking for continuation buys where we can hit liquidity targets like this. All right. And so we were looking at uh, the 1 hour here, right? It was a 1 hour demand play, right? In alignment with a 15 and 5 demand play. Price rallied. A lot of early buyers got into this move here too early, right? From seeing the shorts fall off. And then they got mitigated, right? This is clean mitigation, right? You have a low, you have a new high, right? I would have liked to see a 71% retracement, but it was still a good mitigation off the open of the candle. Then you had the New York Open from July the 2nd, boom, bullish price, bam, attacks. All right, so the same thing here. And now there's so much imbalance and inefficiency in price between here that I would wait. If you're looking for buys, I'd wait for price to push back into demand. All right, and then really quick, these were the gold trades that we took in the chat at the end of the day. We ended up taking these. Why did we take these trades? I don't really take that many gold trades. It just made sense, right? You had a draw on liquidity. You had shorts to have to cover, right? So if this was a futures position, this is a CFD markup because that's where we took it, but same thing applies, right? It's a short position. I hope you guys learned this from me. If you take a short position, like here at New York Open, and price falls in your favor below an old low, I would think that you're taking profit or partialing or trailing your risk down on the move, right? And when you do that, right? When you have when your TP gets hit at 39 or 32.90, what happens? A buy limit fills on short positions, right? When you think about the futures market. So why wouldn't you come in and buy your take profit? You get what I'm saying? And so now we have those buys. We were able to take a partial when price came above here. And now we're able to stay break even right here and see if price will build up tonight to go back to now, which would be previous day high is here. All right. And that's a great target. And then this target, I would say here, like right above this high. So That's what we're in on gold to just kind of seeing on that, but it does look pretty good. But I'm not as familiar as I am with the NQ price. Okay. All right. So now let's go over the NQ trades really quick here. Let me make sure you guys can see this. Okay, so the original liquidity that we were targeting was the overnight trader, right? The overnight M pattern. Obviously, we can all see that M pattern there, right? Make sure it seems clear there. Okay, cool. And so I think if I do this, it'll get more screened. Okay, cool. So now when you look at this, right, I play supply demand. I don't know how other people play it, but that's how I like to have certain orders in specific areas, right? I don't want to have a buy order inside supply or distribution, right? That'd be crazy. And so remember, like we talked about on the 1 hour, we were looking at demand. That's why I have this marked that when we come into this level, if I see rich retail or rich or high level noobs or anything selling at New York Open, I want to see does that short, right? Because we're talking about that same situation we were talking about earlier. If I short here, am I going to get a push into demand where I have to put a buy limit in because it's not going lower and giving me the objective low, right? Or like that's the scenario, right? You short at New York Open, like most people did here, right? You're looking at this one on the right. People shorted here. They played a price down. Price started making lower lows, right? All the way to it made into the 1 hour demand. Now, where I've seen a lot of people getting caught, and I see a lot of people getting messed up on plays like this, is they'll find the great short at New York, and this is how I found this setup, right? The absorption plays because some of these plays are just difficult. Like if you took this 5 minute play at New York Open and you had your, I would say like entry on that 5 minute area, like we do, and put our risk at that 5 minute high, and then you're targeting your first area to start exiting the trade there to start managing the trade. Great. You know what I mean? Like that's a pretty solid trade, but you have to understand that when you get out of this trade, right? So for example, let's say for here, right? I just want to do this that you got in here, right, on your short, and then you're looking for a place to get out, right? So wherever you got out, now look on the left side, guys. I want you guys to see this. You shorted up in here inside supply and distribution. And then when you're getting out of the trade, right, let's say it was right here, right? Let's say it's right here. Look left. You're inside demand, dude. You're inside demand. That's what most people don't understand. They're not looking at the higher time frame from that perspective. And so what I'm doing is I'm watching these shorts that are just I think is, they have one option on this short. If this is really a banger, this is going down to the next level. Is it not? It's going to swipe the previous day low. It's going to come into that Wednesday trade, swing high, swing low, right? It's going to come into the 76, the 22 700 level. My key. That's the only thing that could happen technically, right? Think about it. So they didn't get that. So what did we get at today? Buy orders inside demand, buy orders below monthly open, buy orders off key levels. Now, what was helping me was seeing people miss this short at New York Open, and then you've seen people come in after it took this first area of liquidity, and they decided to start buying. Right. So let's plot that. Let's plot that and see how that looks. Okay. So this would have been here 840, right? To 845, people seen strength right here and they immediately just start buying this, right? I used to do it. But look at your location. You're not inside supply demand, right? You're in a trap candle, which that could still work. Not saying it can't, but it's less likely because they know everybody right here in New York wanted those highs. Like on the first break, they're like, okay, people think, okay, it's going to just run up now and take that. No, it's going to dig deeper inside supply demand. And then when you look at the 4 hour too, guys, think about it. This is a 4 hour demand candle, right? So I'm looking for specific prints inside these areas to see where price is going to go. Right. So that, like I said, if you were one of those people that as soon as it broke the first low in the 5 minute, you bought right here, that's okay. I used to do the same thing. And I've done it so many times that that's like a turtle soup, I guess you can call that. Right. Because people are trying to buy the very first sign of strength that they see after the sell side. Right. So if you got caught in that, understand it's okay. Now, when we talk about RSV, something that we're looking for is we see this price all right here, right? How it went down, lower low, lower high, lower low, lower high. People tell me if I'm wrong, right? Lower low, lower high, lower low, lower high, lower low, lower high. How many times do you buy, lose most of your ammo, right? So let me show it over here actually, because I showed someone this earlier and it was pretty cool, right? Oops. Or let's do it right here so you can use this as reference. So you have lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, right? And you've bought, maybe you've seen it go lower here. You're like, nah, I'm good. I don't want that one. It goes and then it drops down. You're like, cool. I'm glad I waited. Shows a little bit of sign, like something like a, like a 5 minute sign higher, kind of like what this was starting to show, like right here. And you're like, oh, okay, maybe I can just buy it like this, right? Boom, and it sinks you and goes lower, right? Now, how many times have you used most of your volume or most of your ammo on the left side? Right? So you went here, and then you're like, well, it does something like this and gives you that beautiful mitigation shift. And you're like, damn, well, I wasted all my ammo on the left side. So now I can still get in and get the best trade, right? And most of the time you're like, well, because I have no ammo and I don't have any, thing left in the tank, you don't take the best setup with your stop loss at the area where you can manage it great. You wait for price to go up on a 5 minute, right? And then give a trade and you take it up here after the break. So people are like, oh, okay, after the break, then they're safe enough to trade. It's because they got bodied on the left side all the way down, so they don't have enough ammo because they didn't wait for the right side. Let me know if that happens to you, okay? And if it does, it's because you want to be watching higher time frame demand and supply, okay? And so for me on the setup there, I was waiting for the capitulation bounce. I was waiting for the price to go up. Now, the one thing that I didn't do today is I didn't play this first area. Now, what I like to see is one sign of strength, right? And then I like to see that second candle as an area to entry, right? So usually I would buy this area and play up. I didn't do that though today, right? So just kind of showing you guys the area. And so I missed, but usually I would. I would play that area, and how I would play it just to kind of show you guys would be like this. I'd buy usually with micros here too, right? Stop loss could go at the body for me here or this low, right? So this low was eight. The entry was 875, so I don't have more than a 20-point risk, so 65, 55. So let's say we had a 55 was our risk, and then our TP would be getting back to above New York Open, or obviously the liquidity spot, but just I like to protect or pay myself at point of interest. And so in this situation, the trade goes, right? Boom, goes up, right? And takes that area high. Now, let me tell you what's happening here. People at this point, they're not buying where I'm showing you guys. They're not buying in the accumulation like you're supposed to. They're buying here, right? Because their eyes are telling them what to see. So if they see it pushing up super fast, right? They're buying, 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 right? Now, how did we find that short above New York Open today? Because there's everyone that bought right here at 930 wanted this high. They wanted that target. Come on, right? There's no other way around it. So why did they body these individuals and why did we play that short? I'll explain why. Okay. So now we let price come. Also, this is that same price. You got that candle print, boom, higher high, right? Then you had a 5 minute candle, 935 to 940, right into New York Open, right into where? New York Open shorts and supply. Let me ask you a question. If you sold this sell right here, right, at New York Open, most likely most people sold here, right? So their entry was down in here and they had to use New York Open, right? But let's say you did get the entry up in here. Where's your risk? Right? Your risk is either going to be in that liquidity on this high here, right? So imagine they push back up on those shorts so fast that this is something you guys can learn from me that I always say to myself in a market that's most likely always going up is that shorts are short lived, right? So you've got to have a plan to scale out of a short very quickly. And what I've learned from watching like Top Step and Rich Retail and other traders that are profitable, right? Not demo traders, but profitable traders, is when they scale out of scalp positions, how these orders have to fill on the other side and how we can take advantage of other side of those orders and have a massive play. Okay. So price runs back up, takes out the shorts from New York Open. And it's simple. I was taught to sell above New York Open in bearish conditions, right? Or buy below New York Open in bullish conditions. And in this situation, price was very bearish, right? Price had ran back up. This was a beautiful mitigation type setup. All right. This is a beautiful setup that we like to see, right? Because not only did it do that, it ran back up into the 15-minute supply, right? So anybody that bought this fast pump move, this makes sense, right? On a 15 or 5, they probably did it very impulsively. And then, like I told you guys, imagine if you bought right here, look where your order is on that left side. You're buying in expansions, chasing the move. Price comes right into supply. I literally was in the group chat. Let me see if I have it here. So if you guys aren't a part of my OmniProfit Telegram, then you definitely need to join. Or if you're not a part of the Trade House Telegram, you definitely need to join that. Okay, so just gonna bring this over here really quick. Okay. Okay. So I'll show you guys how I framed it up. So basically when price came up, and like I said, I was just trying to show you guys like location of trades is everything. But when price came up and made the 5 minute 9:35 to 9:40, then you have 9:40, 9:45. When do I like to take trades, guys? The first 15 minutes and the last 15 minutes of an hour. And I like trades to play into my hand, right? So I have a certain probability in how I set up the trade. If I sell at New York Open and I put my stop loss at that current high, which would have been here, right? So you had this 5 minute candle print. Let's just say you didn't even get this candle, right? Because you weren't framing up like this area, looking at it like this. Let's say you let this first candle print and you started selling it here, right? That's more realistic, right? So now your stop loss would be here and your target would be where? Old buyers, right? This is the buyer stop losses down in here, right? So this is exact play that we took today because we wanted to sell above New York Open in that bearish condition, destroying those random buyers, right? They weren't even in demand. They weren't even below the daily open at that point yet, right? So we destroyed that play, and this is what it looked like. I just want to show it here. All right, so that play ended up looking like. Let's see if I can scroll in. I don't know if I can scroll in, but that's what the play ended up looking like. And then we ended up hitting that take profit right after that, which was pretty crazy. So take profit looked like this, and then we started to trail off that bottom end of the imbalance area. And we did this across 5 accounts. So this was pretty crazy. Now we knew at this moment that sell side was really starting to build now above the 22,950s. And if they didn't break below daily open at this point, and this demand candle you guys see on the far left, if they didn't break below that, then price was going to accumulate in this area to come back and take the supply and possibly the high of day, right? And so that's what we got. That was the move that I ended up taking, right? I ended up buying this position here, or excuse me, selling this position here, and then giving my position back at those old lows. And then as I continued to watch, I did say, like, I think this could be, a good run up on that liquidity. And then I seen there's a lot of things I could go over when it comes to how this actually played out. But let me show you guys something, okay? Because if you trust supply demand, you're going to get better entries than most people. And so looking at the trade here, right, I was seeing, in the group chats, people were explaining that. I'm not saying that it won't work and it doesn't work. It's just saying that you want to start to train your eye to see specific things on these 5 and 15 minutes, right? So if you're waiting, like this is accumulation. Let me kind of just show this here. So this is when price is accumulating on a 5 minute. And so you want your buy orders to be inside of accumulation, right? You don't want to wait until price goes all the way here, crosses the 5 minute high, and then you start buying expansions, right? Because look how that'll look. You're not, it's gonna be too high on the order. Now, I also said this, if you're buying these type of areas, right, on the way up to try to smack this liquidity, why did they push this down so violently, taking out the players in this area? Because they played it too high, right? There's just no way around it. They played it too high. And so the reason why I'm saying don't play an entry like this is because before this got to TP, it could have easily done this first, ran liquidity on late players, and then did this, right? I've seen it happen. I've played it so many times. All right. So where I personally like to play this is the same way, like I said, the short, right? First 15 minutes of an hour, last 15 minutes of an hour, right? Same thing with the buys. If you waited here, right, you're probably playing at 11. I'm usually clocking out around 11:15, right? So this is already 11:10 to 11:15. You're getting higher high, strong signs of strength price, right? So look at the expected value, right? The target is the target. There's no way around it, right? I pulled up the supply demand pictures here. Let me see if I have them in the Telegram here. I posted them in here because I was taught it a certain way, but I have my own personal experience. You know what I mean? Where is it at? So, like for example, this individual in our group chat, they bought it up here. There's nothing wrong with buying it in that area, right? Or buying it in this area here. It's pretty close to that 5 minute demand play, right? But you got to ask yourself, where's your risk, right? That's what I was asking this individual here, right? And so, like, think about it, guys. If you wait till the price gets up to that area, so you're already outside the demand, your risk on the actual low of day, the intern low of day, because you have low of day, which would have been 22,809, and then I used the new intern low of day, which would have been right in here, or you could have used right above 22,850 because where are people putting their stops, right? And so if you get in right here, not a bad order, you still have good RR to the area, but it's just like if you want to have that top gun, that like elite area with and not have to experience so much heat ever, then you're going to take the trade inside supply demand. Right? Not only are you going to take the trade inside supply demand, you're going to want to take that trade, like I said, in the first 15 or last 15 minutes of the hour. That's when it's going to be inside. That's when the algorithm is inside supply demand, right? Now, the other manipulation that they had today, right, was the divergences on price, but also the how they manipulated on the 15.5. Look at this here really quick. They're accumulating on a 5 minute and they're making lower lows, right, on a 15. I've watched so much price that I kind of have an idea of what they're going to do in that H1 at this point after this fast pump up back to New York, okay? And so like this was very manipulative on how they were doing the 15-minute price and the 5 minute was, like I said, accumulating in the same area, right? And so I could see how that could be difficult depending on, how you look at the markets. So yeah, I mean, that would have been for sure like in here, this would have been a safe trade, but you just got to ask yourself, where are you going to put that risk? So if I take a trade right here, I want it to be in demand. I don't want it to be in expansion because if I can get it in that demand, my risk is most likely going to go here for about 15-point risk, right? I like to use 10 on an A plus setup, like super A plus, and like a B plus setup is like a 20 for 60, right? Like a 1 to 3, 20 for 60. So like I said, if you're getting in right here, your risk, I think about risk before I think about profits. I don't know about anyone else, but that's, you know what I mean? That's how I think about it. It's a game of risk. And so, like I said, if you get in here, nothing wrong with that. 1050 to 1055, good timing, right? I just think that if you're looking at it right at that 1040 to 1045, and you're looking at this candle as like uh, an area of edge, right? That you can actually define edge, then you're able to get in right off this candle, and you have two different stop loss placements. I like to use the body close or the actual wick close. The wick close goes past 20 points, so it would have to be a body closure for me on this one. And I'm looking to start scaling and managing my position as soon as we break a 5 minute high, right, on our way to the target, which would have been that overnight player, or excuse me, that 7 a.m., 8 a.m. Shorts double top player, right? Bam, it falls. So I hope this kind of helps out with the DRC. There's a lot of things I could go over, but I'm kind of pushing it already as it is. But I hope this helps out on that sell side, just understanding how to sell above when price, does that thing that we like to see. So, you'll get basically price to, oops, sorry. You'll get price to basically, right? Let's say this was like New York Open. Price sells off at New York Open, takes liquidity of other areas, right? Below old lows, right? And then you're reading that shift in price delivery, the pullback, the stop loss, risk, right? Play back up to those New York shorts because that's short covering. Hope that kind of helps out understanding and seeing it like that. So yeah, I think today was overall like it's in a range bound market. Like I wrote this down today, things I learned, just different stuff. In a range bound market, scalpers and short sells are important because they help us to get out, or let's see here, the unders and get out of the sells, you have to enter the buys. And patient scalpers, short sells are important to. Where's that? What I wanted to share with you guys really quick. Finally done here. That's on the range. Yeah, so there's just, I mean, there's quite a bit of stuff, but like going forward for tomorrow, I just want to kind of go over that here before we hop off. This is the end of the day tomorrow. So this is what you're seeing is the end of the day for tomorrow. Now there's a lot of choppy liquidity. It was very sideways. So that's what I was going to say. In a range bound market, you really want to understand how to get base hits, right? And also how to understand supply demand on higher time frames so that you can be exiting and entering in the right spots. But going forward, I like to use 4 hours for direction, right? And like 1 hour to kind of understand what I'm looking at. And I would say that since we are still inside this demand area, right? And we're still holding up. We could reach down. There could be a news excuse that pushes us down. There could be anything, obviously that can push us down, but this low is like one of the key areas, 22,600 that I'm really focused on if we do. But if we don't ever break lower than 22,000, let's say 850, 22,800, and we hold inside 4 hour and H1 demand, I see us making a new high. Okay. And so that's what we're focused on here. We'll see that we get everything. As we went over pretty much everything: NQ, gold, NVIDIA, SPY, QQQ, dollar. Um, so yeah. So let me know what you guys think. Let me know in the comments. Definitely just let me know if there's anything I can add to make this better, if I can articulate the message any better. And you guys have a good rest of your night.